Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our Forex technical analysis template tutorial. We're going to go over the different aspects of our tutorial that help us guide our Forex decisions. Before we begin, we always like to start off with our disclosures. Any symbols that you see today should not be inferred as a trader recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So before we begin, we're going to talk about why we have this template, how we go about structuring our analysis of our forex pairs. And we have a quote here from Ronald Anderson that says, "Adventure is just bad planning." And Lord knows how that car got into the roof of that house. And this is not to say that when you plan, things won't go astray or some mistakes happen. Certainly, nothing is ever going to go 100% as you plan it. However, that doesn't mean you don't plan. You still have to put together a plan, and you still have to have the structure for how you're going to trade, how you're going to interact with the market. And when you have a trade that goes wrong, the reason why it's an adventure is because you did it, probably because you didn't define your risk, you didn't define your target, and now it's just going all over the place. So we use our template to help us plan and help us identify our risk to reward ratio. So as a part of our template tutorial, we're going to look at our relationship with a long-term moving average. We're going to identify the zones within our Bollinger Band. We'll see who is in control as far as the currency pairs, the pairs in that currency relationship. We're going to look for the trends within each currency. And then finally, with our probability indicator, we're going to look at the histograms and determine also who is in control. So let's begin and let's pull up the charts. So we said that the first thing we're going to look at is our relationship with the long-term moving average. So here's price way up here at 1.6297, and here's our long-term moving average. Just for your point of reference, you can see that it is a 233 moving average. You can choose whatever value you want. Obviously, we're not looking for a 10 or a 20 or a 50. We're looking for something above 200. And this is, what does a moving average do? It calculates the trend. It's a calculation based upon the close of price action. So it's showing us when we use a long-term moving average what the long-term trend is. And as we know, one of the first things any trader should be doing is identifying the trend. So what this tells us it tells us, well, it's moving up, so we have a long-term trend that's angling up just a little bit. But more importantly, we can see that our price action is well above our long-term moving average. So the first thing we're looking for is what is our long-term moving average giving us a direction, and then what is the relationship of price with the moving average. And we know typically our moving averages act as magnets. Price likes to pull away, get a little air between it. Here's a little air. Here's a little air, but in both instances here, we can see that eventually price comes back to it. Here, price comes back to it. So as we're away from over here, we're going to say that price moves away from, it's going to come back to our long-term moving average. And one thing that we can watch is our shorter moving average, which is about a 13. And when price crosses that moving average and moves back in the direction of our long-term moving average, we'll typically see that beginning move back to the long-term moving average. Again, we can see right here we pulled off, and when price moved above it, went back. Here we moved away, and when price crossed it, we eventually made our way back to it. Here we moved above our long-term moving average, and when we went below it, sure, we went sideways for a little bit, but eventually we went to it. So now as we move higher, well, here's one that hasn't fulfilled yet. Also here, but you get the trend. As we said, you can plan, but not anything is 100%. So as we look here, we can see prices moving below it. So we're looking for this to make a move back to our long-term moving average. So step one of our template is the relationship with the long-term moving average, and waiting to see when price crosses our short moving average to try to give us a clearer picture of when price action is going to move back to the magnet of the long-term moving average. Our second step that we're going to look at is what zone are we? Where's price in as far as zone? So in our Bollinger Bands here, we can see that we have our brown, which is our actual upper and lower band, and then we have a brown midpoint here. And so what we're looking at are zones away from and below our neutral zone, basically deviation. So when we're above it, we're looking into sell zones. When we're below it, we're looking into buy zones. Our middle area here, directly above and below our brown middle moving average, we're calling neutral. We're calling neutral. You can see it's 144 moving average here. This is our neutral zone. Price can go either way. But as we move away from our neutral, just like the long-term moving average, we're expecting price to eventually come back. So therefore, these top two areas are sell zones, while these bottom two areas are buy zones. Again, as we can see, as we hit our buy zone, as we hit a sell zone. That doesn't mean it, as you can see immediately, as soon as we get into that area, it immediately reverses, but it means the probability, the likelihood is better for a sell up here than a buy. Now, the other thing to watch, as we go from zone to zone, you can see that once we cross one zone, and we actually close above it, there is a likelihood to go ahead and at least make it towards the next zone. So the key is once we close into that new zone firmly, wicks, 180 BD, these little wicks here, that didn't give us. But once we clearly close into it, eventually we made our way higher. So in our second stage, we're looking at our neutral area, and we're looking at our two sell zones and our two buy zones. Step number 3 in our template is who's in control. So in this example, the red is the dollar and the blue line is the pound. And so we're simply looking to see who's on top, who's in control. So in the pound dollar, when the dollar is in control, the currency pair goes down. When the pound is in control, the currency pair goes up. And we can see in our example here, the pound took control, price went up. As we crossed over, the dollar took control, price goes down. Here, price kind of went sideways. Here, the pound took control, price went up. So knowing who's in control can tell us a little bit about which way price action may go. Now, one thing we also want to look for is there divergence or convergence? Divergence means, are those two lines moving in opposite directions? So we can see here when the dollar took control, there's divergence. We can see here when the pound took control, there's divergence. They're going in opposite directions. When we see this sideways action, notice price also moves sideways. So what we're looking for, and then when they start to converge, when they start moving towards each other, we'll see some action in the price also. So what we're looking for is who's in control. Do we have them moving in opposite directions? Do we have them moving towards each other? Or are they moving parallel, one on top of the other? Step number 4 in our template is to look at our individual currencies in the currency pair. As we're looking at the pound dollar, yes, they correlate with what's going up here in our who's in control for step number 3, but now we're just looking at them individually with our dollar and our pound. So here we can see that the dollar is trending down. And we see that in who's control. And that can give us a heads up, again, to what price action is doing. If the dollar is getting weaker, then we may see price move up. However, we can also see that the pound is getting weaker. So they're getting weaker together, and that's why initially we saw price action go lower. But once the pound starts making its move higher, the price began to move higher as the pound was showing more strength. We also have a long-term moving average on here just to see, again, just like with our price action in step number 1, what's going on with that currency pair. Is it away from the long-term trend, or is it close to it? And is it going to act like a magnet? And you can see here, I mean, basically it was a magnet. So we're watching to see the trend So it will give us a heads up to who's going to be in control, and we're watching for a relationship to give us clues about what price action might do. Our final step in our tutorial is our probability indicator, and there's two things that we're going to look at in our probability indicator. First are the histograms. Any of our MACD fans will recognize our histograms, and basically all we're looking for in our histograms are when price is getting into our high probability of reversal. Here we had a high probability of reversal. So we're just looking for these extreme areas, overbought and oversold areas. Our moving averages in between also, similarly to who's in control, also tell us, not necessarily here we know the dollar's control or the pound's in control. On our probability indicator, we can see that the buyers are in control with the green above the red, or the sellers are in control with the red above the green. So we're looking for our histograms to get into overbought, oversell probability level, price levels, and we're looking to see when buyers are in control and when sellers are in control, and then when they coincide, we get a extreme print, and then we see the correlation also happen within our buyer and seller moving averages.